The shock Dubai news raising investor fears of debt defaults that could hit the global economy just as it's trying to recover from the financial crisis. What are you making of all the news here?
Absolutely. Just as we're getting ready to relax and go into the Christmas season and the end of the year, this has to happen. So the market's really not liking it, reacting it very badly to it, and we saw quite a pullback today, especially emerging markets such as South Africa. A lot of, especially also the resources side, a big pullback there, big pullback in our markets. So investors, very unsure, very unsettling times these, and just major pullbacks all around the world.
Some saying that we'll possibly only see full market reaction on Monday, once, of course, we see reaction on US markets tonight, and then details about this entire debt restructuring process getting unveiled as well. What are you anticipating in terms of reaction next week?
Well, the United States will only be open, I think, half day today, and then reopen fully on Monday. And hopefully we would have had word from the Dubai government as to how they plan to implement this restructuring and what they're going to do, and to have some easing or some soothing of the market with what they will say. So, yes, we anticipate that the Americans will not like it at all. We've already seen reaction of that in the dollar, where the safe haven assets such as treasuries, US treasuries or European treasuries, the dollar has been moving more that way. And so we anticipate that on Monday, it's when the United States opens at about 4:30, they're not going to like it. The traders are going to be pulling out quite a bit from, especially from emerging markets.
With risk appetite diminished and gold sliding, possibly not as extreme as other precious metals, but if we look at why gold has seen this pullback, is it purely on the back of dollar strength?
Yes, I think it is purely on the back of dollar strength. I think, them choosing safe haven alternatives such as US treasuries and using the dollars to go and buy US treasuries instead of remaining invested in gold and other resources. So the pullback that we have been seeing is really just a reaction to what is happening in Dubai and what is happening in the world, and then just opting really for the dollar rather than gold.
In the meantime, Murray & Roberts issued a statement this morning saying that the only contract to which it was exposed was the Trump Tower. The contract was terminated and all accounts have been settled on that within the previous financial year. They've still got some settlement awaiting at the Dubai International Airport and their involvement there. Any market reaction despite the reassurances out of Murray & Roberts this morning, simply on the back of overall sentiment?
Yeah, I think it's a bit difficult to separate between what would be reaction to Murray & Roberts' stock versus what's happening in the JSE. But yes, everything, there has been a general pullback in the market. So I think that, the investors still not happy about it. Construction companies under scrutiny right now as to where they invested, especially South African construction companies. And yes, they have come out to, ease fears and say that actually they out of the Trump Towers business and just waiting payments from the airports. So I think that the market's just waiting for the United States to give them some indication, especially when we're going to see on Monday who in the United States has got Dubai interests and which banks are going to be affected by what happens with the Dubai pullback.
In the meantime, Liberty announcing Q3 results showing profitability after losing some money in the first half on the back of rising equity markets. Overall impressions in Ntombenhle of those numbers released this morning?
Not very bad numbers at all. I think, just peaking a little bit, especially with the lapses on the life business. And, that's very encouraging that at least there's some stability going there. They've done well in terms of the equity markets. That has helped them quite a lot. However, their hedges perhaps that they had on their books limited their profitability in the equity, local and foreign equity markets somehow. So not a bad showing, unfortunately clouded by what's going on in the world at the moment. So not really benefiting from all of that. And we saw that, their sales are also down at the moment, and just goes to show that the consumer is still very much uncertain, still very much cash strapped. Disposable income is not coming into their investments. People are rather cashing out and using that money for other other things rather than investing or having life policies or whatever. So very mixed bag, but overall I would say a Q3 good results.
Having said that, I mean, as you say, it is a mixed bag, because while we do have this consumer that is under pressure, lapse rate stabilization offers some positive sign in line with the broader economic readings we've seen, suggesting that yes, while consumers remain under pressure, conditions are improving. So how are you viewing insurance stocks as a whole right now? Is now the time to be getting in?
I think, I think cautiously people can actually go into insurance companies at the moment, especially considering that, GDP came out more favorably this week, and, we're anticipating a market upswing, and we're anticipating, that the market will improve and consumers will potentially get more disposable income. But I think it really also depends on which asset management or, which life company you're looking at, or which insurance company you're looking at. For instance, what their equity, how much they've made from their equity, what their hedging is like, and what exposures they have at the moment. And as we saw with Liberty's results, their life business sales, they're down 11% or something near there. And just to be cautiously in there. But I think they are good companies to get involved for future.